What's going on, everyone, and welcome back to the channel. My name is Francisco, and today I'm going to be showing you proof that value investing does work. And I'm going to show you some examples of investors that have used this strategy in the past, have gotten very, very wealthy and rich. And, there's check out the timestamps in the description below if you want to jump ahead to a specific individual that interests you. But, with all that out of the way, let's get started. So here we go. First up is Warren Buffett. Obviously, if you've been watching my channels, I love the guy. He has obviously figured something out, and this is his approach. So value investing. Price is what you pay, value is what you get. Pretty simple. What you're buying at a reasonable price. So that's pretty self-explanatory. And you can see here from the chart that he's been investing for about 60 something years, or no, probably like 70 something years, and his annual rate of return since back when he started in 61 or something, or 51, has been about 20% year over year. So this is what 20%, starting from at the age of 14 all the way to 91, which is current year. I think he turned 91 this year. So obviously at 20% growth, he has been able to amass all the way up to 91 billion, which is ridiculous. That is a ton of money. And, these are some of the companies. I'm sure most of you have seen some of these companies when you're driving by or just commercials or whatever, but these are all the companies that Warren Buffett owns under Berkshire Hathaway. So I'm sure many of you know Duracell, Dairy Queen, Fruit of the Loom, Geico, Benjamin Moore Paints. Like, these are staple brands that you must know 100%. There's some other ones in there, Nebraska Furniture Mart, Berkshire Hathaway Energy, all these things like that. You might know of those, but the other ones I just mentioned, you definitely have probably seen one. If you eat a Blizzard, you've been eating at Warren Buffett's restaurant. Some of the ones on the right-hand side, these are significant stakes. They're not 100% owned, but they have a great stake in the companies. IBM, Bank of America, Apple, Wells Fargo. What do we got? Coca-Cola, Kraft, Heinz. You get your mustard and ketchup, you're buying it from Warren Buffett. Goldman Sachs, United Airlines, Delta Airlines. I'm pretty sure he sold those recently, but regardless, GM, you're buying a F-150, you're getting it from this guy. So yeah, those are some of the companies that are owned by Berkshire Hathaway, or partly owned. Then next up is his right-hand man, Charlie Munger. His famous quote is, "A great business at a fair price is superior to a fair business at a great price." What does this quote ultimately mean? Buying the best of the best companies in the sectors that they're in is far better than owning a mediocre company at a very, very good price. Why is this? Because companies that have been along for so long have that brand name. They have a moat that allows customers to instantly go buy. When you go buy ketchup, you're probably getting Heinz. When you're getting a soft drink, you're probably own something that Coca-Cola owns, or maybe Pepsi, Gatorade, all that stuff. Like Doritos, you can't get Doritos from anybody else except Doritos. Or Apple products, things like that. You can't get another Apple product unless it's Apple. So that's what he's talking about, owning these great high quality companies. His year to date, I think he's worth $2.3 billion. He's 98 years old. That's something that his grandkids and kids, if he eventually dies, because he's almost at 100, but he's just been killing it for even longer than Warren Buffett. But obviously Warren Buffett, just the OG, nobody can beat this guy. Here are some of the companies that Charlie Munger owns. So we have Berkshire Hathaway stock. Most of his net worth is tied up with Berkshire Hathaway stock. You got Costco. Who doesn't love Costco? Like $1.50 for a hot dog and a drink. At least here in Canada, it's $1.50. I don't know. It might be cheaper in the States. Like the place is phenomenal. I have a Costco membership. I go there. it's great to buy. I buy stuff I don't even need. That's how they get you. Anyways, POSCO, we got the Daily Journal. The Daily Journal has other companies within the company itself. He has Alibaba stocks. He has U.S. Bank, Bank of America, Wells Fargo as well. And he has a set of investments with Li Lu. Li Lu is like the Chinese Warren Buffett. That's what he himself has called Li Lu. Now, here's another guy, Guy Spiers. His famous quote, "The entire pursuit of value investing requires you see where the crowd is wrong so that you can profit from their misperceptions." So pretty self-explanatory, going in when everybody else has fled the market, because through irrationality, through fear, through just misvaluing the company entirely, that's when you go in and try to find a price that you can buy these companies that's justifiable for the risk that you are putting in. Obviously, Guy Spiers has taken a lot of inspirations from Warren Buffett, buying fantastic companies at really cheaper prices, not paying indefinitely for them. So some of the companies that he has currently right now in his Aquamarina fund, which is his fund, he's got obviously Berkshire Hathaway, Bank of America, Micron. This is a semiconductor for, I think it's RAM they make. The Daily Journal, which is run by Charlie Munger, Alibaba stock, Ferrari, American Express, MasterCard, Moody's, Google, Seritage Home Properties. Just like you look at this and immediately you can recognize probably 8 out of the 10 or 8 out of the companies, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 companies, 8 of them you probably recognize. They're quality, high growth, amazing companies. And so what else do we got? We got here Mohnish Pabrai. He is also, like Guy Spiers, much younger than Warren Buffett, but he, back in 1999 when the huge dot-com bubble was going off, he read into Warren Buffett, liked the way he was, his investment approach and strategy, and it just clicked with him. Buy great companies at a cheaper price. It doesn't work for everybody, but he was able to figure it out, and it's been his philosophy since. His quote is, "The single biggest advantage a value investor has is not intelligence. It's patience and waiting for the right pitch and waiting for many, many years for that right pitch." So again, just not paying indefinite for a company, waiting until that price comes down, or waiting until the fundamentals improve to justify paying for the price that it's trading at. So always remember that no price is ever infinite. Nothing is ever infinite. There has to be a justification as to why you bought it and where it will go from there, and knowing why it's going. Some of the companies that he has more than these. However, I cannot find them because he deals a lot with investing in India because he is Indian, and simply you can't find these companies like you can in the United States. United States, everybody has to file 13F filings to be able to report to SEC, but in India they don't have this. Anyways, some of the companies. He has a Turkish company called Racist Logistics. This company is a pretty big company that has Amazon and as a vendor, if I believe correctly, using their properties. They have Prosus, which owns a huge company called Tencent in China, a huge stake of like 30% of the company. Micron, again, Seritage Growth Properties, Indian Exchange Trade, that's an energy company in India. They are probably the most successful energy company in all of India. Then we come to a guy, our last guy, Li Lu. Like I said, I mentioned earlier, he is, well, Charlie Munger says he is the Asian Warren Buffett. And Charlie Munger, he's the only guy Charlie Munger has trusted to be able to put some money in, and he manages it by himself. So obviously a great deal of responsibility, especially when, somebody as successful as Charlie Munger is able to have enough trust in this guy to be able to manage his wealth. So some of the companies that he has in the United States, like again, just like India, China doesn't have the rules where you have to report what you're investing in. But here are some of the American holdings that he has. Again, Micron, Berkshire Hathaway, Tencent, Alibaba, Google, Meta now with all the platforms inside of it, Bank of America, and Apple. Just very high quality business. Again, you've seen all of these business. Maybe not Tencent and Alibaba, but they are Tencent and Alibaba are very large companies in China. But the other ones you might have heard of. And yeah, so this is proof that it does work. Owning these companies is possible. You just have to wait for the right time to be able to buy them. What is a justifiable price to own these and see them go up 10% a year, 15% a year, et cetera, et cetera? That is something that we will discuss later in the channel. I'll have to make more videos first, but we will get to that point eventually. But if you like the way I do my presentations and the way that I come across, please subscribe, and I'm just going to keep making more and more videos, and check out some of the other videos I have. I have some the best ETFs that you can ETFs and indexes. And yeah, so until next time, thank you for tuning in, and have a great day. Bye.